Good evening, everyone. My name is Juliet. Welcome to Crypto Queen Academy and also welcome to Digital World Academy. Today we are going to be walking us through on amazing topic. Please, if you can hear me, I can hear you. Last week, can you hear me? Can we hear me? Okay, okay. So, moving on, the purpose of this academy is to help in capacity building. So in Crypto Queen Academy slash Digital World Academy, we focus on capacity building, where we help young growing young ones or anyone who is interested in learning basic knowledge on how to be able to generate signals by oneself without leveraging on any signals by anybody. So far, we have been able to share values. We've been able to share technical values, knowledge, cut across indicators, momentum, strategies, both futures, how to trade futures and how to trade spot. So for those who have been following us, they can testify that it's been amazing for the past 2 months with Crypto Queen Academy. So today, um, we have leader Alex Esse, who will be anchoring us on an overview of cryptocurrency. Then after which, Daniel will take us on our major topic today, Fibonacci, retracement, expansion. Then he will also show us how to draw trend line in Binance. So these two knowledge will be shared using Binance Exchange. So I know you wouldn't want to mix this value. Pay attention as the teaching is going on, then ask questions where you feel you are confused. So questions will be taken at the end of the class. It will be expedient that you pay attention as the class is going on. We also give room for anyone who have knowledge, like in our academy, in our WhatsApp groups, we have amazing leaders who have knowledge more than myself, and they have even been contributing. So we'll make room for those who have knowledge to share to also share. So it's not limited to any particular individual. As long as you have wide knowledge in cryptocurrency, you can inculcate in us, and we will be glad to learn from you. So I will be pleased to hand over this Zoom call to Alex Exe, who will be taking us from here, after which Daniel will take over the meeting. Thank you, everyone. Alex Exe, you can take the floor now.
Yeah, good evening, Crypto Queen. Thanks so much. Good evening, members of Crypto Queen Academy and Digital Wars Academy. It's so nice to be on this Zoom call. Basically, I'm going with the assumption that there are still people who are in this call right now and are totally new to the whole idea of cryptocurrency. Okay, so you just hear people making money from crypto. And you're like, what's this crypto self? All right. So mine is basically an elementary introduction. So for those already professionals in the house, my apologies, but we just have to do this at least to still, at least there's one or two persons who might just be hearing the whole idea of crypto trading right now. So if we're going into Fibonacci, without these people even knowing what they are doing, it's going to be like we're speaking Arabic to them. So basically, what is cryptocurrency? It's like, in fact, right now, if you don't know what cryptocurrency is, then it's like you are still in the 14th century, okay? Cryptocurrency, basically, these are digital assets. Now, mind you, we call them assets because they have the propensity to grow in price, all right? So you can imagine Bitcoin as far back as 2013 and Bitcoin now. So since these things are assets, basically, you need to do like a proper research to know, would this thing grow with time? So And when you talk about trading, trading simply means you buying low, you selling high, or you buying high and you selling higher. So if you really want to make money out of trading, then you should be able to have some analysis of, for example, now when you want to get a land, you ask yourself, is this land, is it close to township? Is any reasonable developments coming to this area, right? These are questions you ask. Also in cryptocurrency, before you trade or you invest, these are also questions you need to ask. So in the long term and in the short term trading, now mind you, when we talk about trade, we have the long-term traders, short-term, and we have day traders, based on how people trade. So there's some people who trade like daily and they're like, okay, I want to go into this market now. What will be the driving force of this market? Okay, I want to get this coin right now. What will be the driving force? And for you to do that, you need two basic tools, which is fundamental analysis and technical analysis. Today's topic is basically on technical analysis. There's usually an argument. For some people, they say, which one is more important? Is it the technical or is it the fundamental? The truth is both move the market and you need both side by side, okay? Yeah, because at some point, your technical can be so good and one fundamental news comes to sweep you off your feet. Now, what are fundamental news? Basically, just imagine you have a land. Now, let's put this, you have a land. And the next thing, you now hear that a university is coming to that area where you have a land. For those of you who are into real estate, you know what happens now. All the landowners there, the price of that land will skyrocket, will triple. For example, that is because your land is an asset. Same thing happens to cryptocurrency, for example. So if you have a crypto asset and next thing there is a massive adoption, a big short is about to adopt, or a big short is buying in bulk, these are fundamental news, positive fundamental news. News of war, news of natural disaster also could also affect the crypto markets. News of inflation, CPI data and the rest could also affect the markets. So this is what you are dealing with in fundamentals. But in technical analysis basically, now when you, okay, let's do some pictorial representations. Permit me to share my screen right now and show you some things on them. So when you go to Binance, for example, and sorry, I'm using the phone, but I'll just try and do something. I just want to pass the point across. So let's say you go to BNB/BTC chart. Now, when this chart you're seeing, for example, is a representation of data of past occurrences. Now, what you're seeing here basically is a representation of data. Now, you can read this data, meaning looking at the past and how trends have been occurring, and you can draw up an idea of what would happen next. This is just a summary of technical analysis. Everything you're seeing here is historical. So when you talk about patterns or movement of patterns and a whole lot of other things, all those complex things which we do not like in crypto, the summary of it all is, if this and this happens in the past, when this and this happens, when there was this type of movement, okay, this was the result. So people will not tell you, okay, when you see a cup and handle, for example, technical terms, for example, this is what you should be expecting. When you see double bottom or whatever, this is what you should expect. This is just drawing data from the past. And one of the ways you can use in understanding this is what Mr. Daniel will be teaching us today, Fibonacci, retracement, and the rest. So if at this point you are new to crypto, do not be scared. Do not say, I have not reached this level, so this knowledge is not very important for me. But trust me, at some point in time, you're going to cross it. So why not just learn it now? And mind you, if you want to learn crypto, trust me, you cannot learn crypto in a day. In 2 or 3 months, you cannot learn crypto. If you really want to be a professional, keep on learning. Any knowledge you gather by the roadside, have it and just hold it by the side. So right now, if this is your first time on Zoom meeting, listening to what is crypto basically are digital assets, okay? And we make money from them because the market is volatile. This up and down we are seeing in crypto is what we make money from. If the market does not go up and down, trust me, you will not lose money, but you will not also make one dime from the crypto market. So it is this upward and downward movement that gives us money. But the question now is, how do we know when to go in and how do we know when to exit? There are so many theories you need to learn, so many when it comes to technical and fundamental, so many things you need to learn. But today we're going to be learning a fundamental one, Fibonacci retracement. So guys, I want you to put on your seatbelts while we clear the room now for Mr. Daniel, who will be taking us through. I wouldn't be able to identify you right now. Okay, if Crypto Queen is here, then Crypto Queen, please just let us know if Mr. Daniel is yet in the Zoom meeting so that you can give him the floor to take the Fibonacci retracement training.
Hi, Alex. I'm online. Good evening.
Oh, okay. Good evening. Nice to meet you, boss.
Now you be boss. So good evening. All right. Hi. Good evening, everyone. Hope we are doing fine.
Yeah,
hope you
we're
can also
good.
hear me. All right. So I'm going to take us on Fibonacci retracement as well as extension. But on Binance, we only have the retracement tool available. So and then Binance, I'll show us how to use it on Binance, but I will show us beta on TradingView. I don't know if we are familiar with TradingView. You can just put it on the chat so that I can see. If you are familiar with TradingView, you could just say yes. If you are not familiar with TradingView, you can also say no, so that we can be on the same page here. I want to see how many yes and no we have. No, yes, no, okay. Oh, all right. I would say that it's almost 50-50. Okay. So let me share my screen, and then I will take us through to Binance, and when I'm done there, we can just quickly look at TradingView. I'm trying to share my screen. Just give me a moment. Sushi. Okay. Okay. All right. So can you see my screen now? Just yes, we do. If you can see my screen, so that I can move out from here and get to Binance. All right. Thank you. All right, so Fibonacci retracement. So I wouldn't want to go more technical, but I will just give us the basis of what Fib is all about. It's actually a statistical way of measuring occurring details, but and it happens to be that life moves in threes. So we have 3%, 30% multiplied by 3, that's 90%. Sorry, and we also have the 3% multiplied by 3, we have roughly 100%. So Fibonacci actually looks at retracement actually looks at how does a coin that actually moved up come down? And also that same coin that came down, how would it also go up? Trading is mostly about probability. It's not certain, but as often time as possible, we can always get it correct or wrong. I can't see the messages on Zoom any longer. So once in a while, Mr. Alex, you could also let me know if I'm still audible. So when you get to your Binance, so Alex, could you hear me? Did you hear me? Okay, I saw the chat. All right. So when you are on Binance, the first thing you will do, hold on, let me clear this. The first thing is that you notice something like 2 arrows. Point is just here. I'm using an iPhone, so it might be different for an Android phone. You see these 2 double arrows pointing up and down. You click on it so that your phone can get on the landscape mode. That's the way you are going to be able to use any of the tools available. Then you at the bottom right corner, you will see something like a pen. At the bottom right corner, you see something like a pen. How many people have seen it? If you have seen what I'm trying to explain, just send a yes. Let me see how many people got that before I continue. Okay. Any other person apart from emoji? All right. Okay. All right. So when you have that on, you have that's your tools available. You have your tools available. So you can actually increase and decrease the zoom as you want. You can increase it, you can decrease it using your two fingers. All right. So the next thing you do is you pick a tool. Up here is your trend line, your extension trend, your ray, different tools you can use. Then we have the triple and the painter wave. That's the correction and the pumping waves, depending on which of them. These are different technical tools that you could use. Then this is actually just the box that you can draw. You can pick a point and draw a box. It could be your support box. It could be your resistance box. I believe a couple of us should be familiar with using that box. Then the next one that's highlighted is the Fib tool. So from point 1, 2, 3, 4, the fourth tool is your Fibonacci retracement tool. How many people saw that as well? Just want to be sure before I ran to myself. Can you just put a yes on the chat box if you know how to select the Fib tool by yourself on Binance? If you not get it, please also put a no so that I would go back again. All right, thank you. Let me go back again. So, this is how your chart looks like. It's always on a portrait mode. So you change it to landscape by selecting the arrow that points up and down. Unfortunately, I can't circle this for us, but the arrow points up and down. Then when you click the arrow, it changes your screen to landscape, right? Then the bottom right corner has a pen.
Danny, can you see the pen? Can't you see the pen? The highlighter.
I've not seen the highlighter.
It's somewhere by the side.
No. I can't see an highlighter here.
It's usually hidden, like beside your phone.
Oh. If you share your screen, if it's possible for you to show that, that would go a long way because I can't speak an highlighter. Yes.
Let
me
me
stop
share my
sharing.
screen and show you
Yeah,
where
please.
you will find it.
Thank you.
Because without the highlighter, it will. So I don't know if you can see my screen.
Yes, I've seen your screen.
Look at where it's basic. It's always by the side. Look at it beside WhatsApp. Have you seen it?
Okay, let me see if I can get that, but I didn't see this function on my own Zoom, unfortunately.
It's somewhere there. Okay.
Okay,
try and check.
Yeah, let me try again. Thank you.
All right.
I'm not seeing any of that here.
Okay, go ahead.
I'm not seeing that, unfortunately, here. Maybe if I had used a laptop, maybe it would have been possible. Okay. And okay, let me see if I can do that using picture. Yes, I think I can do that using picture. So let me go back to Sushi again. All right. I think I can pick a pen here and show us what I'm trying to say. Sorry, let me do that again. So can we see what I'm trying to mark blue? I'm trying to circle a particular place with blue pen so that we could actually see what I'm trying to say. Because that's what you would actually need to highlight to get. Can anyone see what I was trying to highlight? Don't even get the basis. There is no need of us going to the next step and it will be fruitless. Okay. Okay. All right. Thank you. So if you put your on landscape.
Daniel, it seems your network is bad. We can't hear anything.
Mr. Daniel, can you hear us? We're struggling to hear you, like, seriously.
I'm sure probably he's having a call. Hello? Mr. Daniel, can you drop a message in the chat box? We can't hear you. Apan.
No, and I want to, I'm not prepared for this lecture. I'm
So
not just
Apan
take
is
it
here.
there.
Wait, Alex. Apan can anchor us. Where is this?
Is it?
Someone. Apan. Apan. Email Apan. Okay. Email Apan. Good evening.
Yeah, Juliet, what's up? Good evening.
Good evening. Please, I don't know if you can take us from here.
Okay, I'll try.
Okay. Thank you.
All right. All right. Good evening, everyone.
Good
This
evening.
is more like an impromptu assignment, but I'll do my best. Okay.
Thank you.
So I want to quickly say that if you want to get the best of the trading tools available, I would advise that you try and download TradingView. Okay, because you get to have access to a lot of tools on TradingView than on Binance, and they tend to be more accurate on TradingView than on Binance. Okay, so permit me to share my screen. I'll just quickly share my screen. Okay, 1 second. Let me do this. So I'm share my screen. Can everyone see my screen? So can you guys hear me?
Yes, we can hear you.
Can you see my screen?
Yes.
Okay. All right, so I'm coming. Sorry, my network is a bit shabby, but I will try. I don't know what's on with MTN tonight, so. Okay, everyone can see my screen then, problem. All right, so let me clear off my drawings. Just drawings. Okay, all right, so let me just use an asset that we are used to. So this is what TradingView look like. So let me just activate Binance as well. I don't know, that's really logged in for a while. Okay, so I would be using TradingView. Okay, I'll be using TradingView so that you can. Someone is raising their hand. Okay, Mr. Tao, you want to say something? Juliet, someone wants to say something. I don't know, Tao or something. He's raising his hand up.
Continue. They will ask question after.
All right, so this is what TradingView looks like. Hey, okay, Juliet. This is what TradingView looks like. So if you want to access TradingView, you can just go to, okay, let me clear up this one and just, all right, so let me open another new tab. So just go to www and there's a TradingView app as well. Okay, .tradingview.com, okay, and you press enter. So if you're using a mobile, you can go to your Play Store or to your on your iOS, okay, Apple iOS, you can get your TradingView from there as well. Okay, so let me do this. Okay, so this is what TradingView looks like. So now I'll be going to where my chart is. Okay, so you go to product, you come to chart, and you select chart. Okay. So I think it's best to just, for those who are not used to the TradingView interface, I think it's just best you use the advantage, you take the advantage tonight to actually get to see what TradingView looks like and how convenient it is to use TradingView, you understand, to analyze your chart. It makes things very, very easy for you. Now, so I'll be selecting Bitcoin. So what you do is just look at my screen, or maybe probably I should just use the highlighter to demonstrate. Okay, so let me do something. Okay, so okay, so all right. So let me use it like that. Now, if you want to, the first thing you want to do is get to know where to select your assets. You know what I mean by assets. I'm talking about the tokens, your coins that you are interested in trading on. You understand? Like for instance, now I want to go to where I want to select BTC, so I can use BTC to demonstrate how to use Fibonacci tonight. So now look at my screen carefully because I'll be using an highlighter to outside. So look at, come to this place. You see, come here. Okay, so come here and then select. So now you have access to the menu. So look at the menu here. So we have stocks, we have futures, we have forex, crypto, indices, bonds, and economy. So whichever you're interested in, trading. But for tonight's lecture, we're interested in trading, crypto. So I'll come here, select this guy. Select crypto. So it comes up with all of the assets. So of course, I'll be selecting Bitcoin for tonight's lecture. So I'll select Bitcoin. All right, so this is BTC. This is BTC chart, okay, and this is on the weekly chart. So let me go now. One unique thing about Fibonacci, it actually works on all of the time frames that you want to, depending on what time frame you want to be analyzing your chart on. Okay, it works for all of the charts. It works for all of the time frame. I can't hear you, please. Are you the only one that cannot hear me, Mr. Great? Can any other person
hear you? Go ahead.
Okay, I think it's your network, Mr. Great. So please check on your network. So now I want to go down. I want to narrow down to 4-hour time frame. Okay. I want to narrow down to 4-hour time frame. Okay, so this is what 4-hour time frame looks like. If you actually want to know how to use TradingView, that's going to be another lecture because there's a whole lot to actually master when it comes to TradingView. But I will just show you through some, basic ways you can actually use TradingView. You understand? So you can go and practice on your own after tonight's lecture. Okay, now so the left pan here, okay, contains all the tools, all the trading tools available on TradingView. Okay, and this is actually where you can select your trend line. You can come to select your horizontal line. You can come horizontal line, that is used for drawing support and your resistance. Your trend line as well, you can actually use it to draw support. Your trend line is also used to draw support and resistance, but in another format, in another way. Okay, so we have several tools. We have so many tools here. Okay, there's so many tools here. Like for instance, let me show you some of the tools we have here. We have like series of tools here. Now watch what I do here. Now if I actually select, if I place my cursor on any of the tools here, you see there's actually a what's it called, an highlighter here. Okay, all right bro. So what I do is, if you click on this arrow here, it brings out the tool that is contained in this menu box. There's a whole lot of tools in each of these boxes that you see here. So the best thing is just click on this arrow, this arrow box, then you have access to all of the tools. Now look at what we have here. We have the trend line, we have the arrow, we have the ray, we have the info line, extending line. We have varieties of them here. Okay, varieties of them here. And we have the parallel channel. We have so many tools, useful tools that you would get to know. Maybe some other day, some other time, we'll schedule a time where we can actually do a complete, discussion on how to properly use a TradingView. Okay, but for tonight, let's just go and look for Fibonacci. So what I do is I'll look for my Fibonacci 2 here. Okay, so if I come here and then, okay, let me clear this. Let me clear this guy off. This. Okay, now, so what I'll do is I'll come to this left band. Okay, I'll select this second 2 here. Okay, but I'll use this arrow. Okay, if you use this arrow, you have series of 2s. If you observe, I've actually bookmark, favorite my the tools that I want to use. So for it, so now if you look at this menu here, this pan here, you see there's a whole lot of fib tools, so many fib tools. But the commonly used ones are these two: this fib retracement and trend-based fib extensions. Okay, these are the two tools we'll be talking about tonight. Fib retracement means Fibonacci retracement 2 and trend-based Fibonacci extension. Okay, so now what I'll do is I'll start them. Okay, once I start this, it will appear. You know what, you get to see it on my chart here, so that I can quickly have access to, instead of me having to come here to want to quickly select any of the tools here. You understand? So now I have styled them. Okay, now since we also want to talk about trend line briefly, I'll also go here and then start trend line. Okay, let me remove other tools I've started so that we just have the 3 tools. Okay, that okay, I think I need to start this one too. All right, so let me keep this guy here. This guy is disturbing me. Keep it there. All right, so now look at, I have all of the 2-star here, so I'm going to be removing some of these tools. But anyway, let me just leave them. It's just that we are interested in. Okay, let me remove them. Let me remove them so that there won't be confusion. Okay, let me remove them. So you can just have that 3, just that 3. All right. So we have, look at our tools here. Look at them here. Okay, so let me go back here. Let me do something so you see. Once I start, you see the tools disappear. You start back, they appear. So as much as tool you want to always have access, quick access. These are shortcut buttons, quick access to. You can just quickly come to the 2 palm and then select and start them. Then you have them lined up on your screen. Okay, so now tonight we'll be talking about Fibonacci. All right, so there's a whole lot you need to know about Fibonacci. I'll just teach you. I'll just be straight with what you should know, so you can always quickly have, make use of it. Fibonacci retracement tool is actually a very, very good tool that you can actually use to predict the market direction. Trading is just a game of probability. Okay, no one is 100% right each time you predict the market. Okay, so it's just a probability game, and we all know what's called probability. It might actually happen and it might not. We might be right and we might as well be wrong. Okay, but Fibonacci, help you navigate easily. Like for instance, you want to know when a price is actually moving towards a direction. You want to know, one thing about market structure, please. One thing about market structure, my price doesn't really move. Okay, let me just select a tool so I can teach you something. Okay, and let's use this briefly, a brief discussion on market structure, so because that will help you understand in-depth Fibonacci retracement tool I'm going to teach you now. When price moves, price doesn't just move on a straight line. Okay, price moves in zigzag. Okay, zigzag. Okay, and you know that when we're talking about market structure, we're talking about directions of price movement. Okay, price could either be moving up. Sometimes you'll be hearing some terminology. Sometimes you hear price is trending to the upside, or price is trending to the downside. Okay, price is moving up and price is going down. Okay, so now when price moves, it moves in a zigzag form, and these zigzags actually have what we call impulse and pullback. Okay, impulse, pullback, impulse, pullback. Okay, so now let's go back to what we are discussing. So now say for instance, market seems to be trending upside to the upside, okay? And when you came into the market, you didn't you couldn't catch up with the waves of the market. Like you were not in the market when market started moving up. So you want to, and you're interested in that trade. So you quickly want to know where market will pull back to. Now, mind you, when we say market is trending to the upside, market is bullish, it simply means that look at the bullish terms here. Look at this, just look at my cursor. From here to this place, this is a bullish move. This is an impulsive move to the upside. So let's assume that market is actually trending. Okay, so let me use an instance. Let me clear this guy and do something. I really want you guys to understand and apply what you learned tonight. Okay, so now we talk about three ways, three categories of market structure. Okay, we have bullish, we have bearish, and we have sideways. Now you hear when they say market is in an uptrend. Okay, that's movement to the upside. Or market is in a downtrend. Okay, that's movement to the downside. Or bearish. Or market is bullish. Market is in an uptrend. Market is moving up. Okay, you can use any of those three terms. Or market is actually moving down a downtrend. Or market is bearish. Okay, so or market is moving sideways. Or market is ranging. Now look at the bullish move here. This is up, and now this is what? This is a bearish movement where market keeps going what? Keeps going down. So this is bullish, this is bearish. This is uptrend, this is downtrend. And when they say market is moving sideways, this is a typical example of market is moving sideways, or market is ranging, or market is consolidating. So anytime you come across those terms, okay, you should know consolidation, ranging, or market moving sideways. So these are the three major, categories that makes up a market structure. These are the three. These three I just mentioned are the direction you can always find the market. It is either the market is in an uptrend, or it is downtrend, or it is sideways. You must find the market in one of these categories. Okay, so these are the basic. These are the well, they are not basic. These are the three major ways the market behaves. Okay, now so let's assume that you've been analyzing Bitcoin, and you so happen not to be online when Bitcoin started moving to the upside. And so for you to catch up, the wave, like you want to also feature in that three, but market has already moved, and you can't just jump into the market. No, you need to be calculative. Okay, so now you just go up. So for you to be able to catch up with the market, you can actually use your Fibonacci tool. Okay, now let's see what's going on here. So let's go back to the chart. Okay, now this is BTC chart. Okay, so let's take it from here. Let's assume that I want to, for instance, now this guy, let's use this place. This guy was actually moving up. Okay, this guy is moving up, and I want to see where price retraces to. Remember, when price make a parabolic movement to the upside, of course it retraces. So I want to know where the market will retrace to. Okay, and then from there I can actually catch up with the trade. So that's when I can now use my Fibonacci tool. Okay, now this is Fibonacci. I come here, I select this to remember how you can actually come here to select your tool. Okay, this is Fibonacci retracement. So where I select it, then how do you draw your fib? How do you draw your fib? Now, when you're drawing your fib, you have two things in mind. You need to look out for the recent low. The recent low, market structure, the recent low, okay, where market got to before market started moving to the upside, and the recent high, the highest point market got to before market started what? Retracing to the downside. Okay, before market started retracing to the downside. So in this case, let us look at where market got to. So let's use this place as an example. Let's pick this point where market started going up. Okay, now look here. This is the last point market got to today. That's a swing low. Anywhere market gets to, any point market gets to, like the lowest point market gets to is called a swing low, and the highest point market gets to is called a swing high. We have high and low. Your candlestick moves, okay? Your candlestick, you have low and high. So you pick up your tool, then you come here. So when you're drawing a Fibonacci for a bullish move, what you do is you come here to your swing low, okay? You click there. You see, I've clicked. So you see my tools. This is my tools. Your swing low, and then you move on to what? To the highest point, the first highest point market gets to. Okay, so this is actually this point here. Look at where I'm pointing here. Let me mark this place so you see what I'm talking about. This is high for me, and this is low for me. Okay. Now before let me just quickly explain something to you guys, so you bear in mind. Now we have. Sorry, I don't know why this guy is just. Okay, so we have the fib values. Let me tell you what these values represent, so that when you are drawing your fib, you know what to have in mind. Okay, you know what to have in mind. And look at it. So this is what a Fibonacci looks like. Okay, and this value represents they play a major role. There's a role these values play. Okay, now for instance, I might have edited my own. Well, let me just go and default it so that you guys don't get confused. Sorry, I'll be very fast about it because there's no time on our side. Okay, so let me just apply default. All right. So this is what a default value looks like. Okay. Now, so these values represent levels. Okay, price zones. These are levels. And now, you know, we're talking about price. Price is calculated in percentages. You understand what price is calculated in percentage. So at each point price gets to, okay, this will just give you a clue. Okay, these are percentages. Okay, so normally you always hear 50% fib level, or you hear 60% fib level, or 30 or 38% fib level, or 23% fib level. So these are just values representing levels a price might actually get to before a reversal. So they are just terms. So one thing you do is just know them, and then I'll tell you what role they play. Okay, now so you see this 2.3. Okay, this 2.3 and 0.23 and 0.83 are always considered a very, very strong level. Okay, when price hits that level, this level or this level, okay, price might actually just reverse. Let's say price is actually moving to the upside. Okay, and price now reverse. So when price reverse, you'll be watching out for the levels where price gets to. So let's go back to the chart so that you understand this very well. Let me carry this my guy here. Let me bring it back. So let me clear this. Let's go back here. Now this is a swing low, lowest point price got to before started moving to the upside, and this is a swing high. And now you want to draw your fib. You come here, select your fib. You select make sure the line touches. Now you select the lowest point. You select it, okay, and then go back to the up here. I want to use this level, this point, this place that I marked. Okay, this is also another point. Okay, let me just use this level because this was the highest point before price started making that big move. Always watch out for the highest point price got to. Okay, I'm just using this as an example, right? So when you're looking at when price is actually it's already moving, what you do is look out for the lowest point where price got to, and then just wait for price to get to its highest point. How do you know when price gets to the highest point? Because there's always a reversal. Like for instance, look at this green candle. Price was this red line here. If you watch my screen very well, let me expand. This candle here, okay. If you watch when price got to this, when price make this high, price reversed. Okay, price reversed to the downside before it made another move. So it is technically you can actually use this first high. Okay, this first eye, you can use this eye. You can extend your fib anyhow you want, even as far, but just make sure that it is touching that point. So now look at where I am touching now. Let me remove this and then mark another place. So I want to first use this first eye here. Okay. I want to first use that high there. Okay, so price is here. And look at my lower, look at my swing low here. So now watch out for these values. If you observe, when price make this movement to the upside from here, from this green place, this was the lowest. Price make this movement to this upside here. Now, and price now reversed. Watch the level price got to before price started moving backward, back up to the upside. Let me expand this so you guys can see this thing very well. It's simple. There's nothing difficult, and the principle is just very simple. Though there are other ways, but I'll just teach you the basic ways you can quickly use. Now, watch what happens here. Price made this movement to the upside, and this is the highest point price got to before a reversal happened. Look at the reversal. See how price went down, and before price picked up from here and started going up. And now watch where price got to. Now, it is safe to say that price went up and came back all the way down to the 0.6A level. And this 0.6A level is called a psychological zone, like it's a golden zone. And what do I mean by a golden zone? It simply means that when price actually hits this point, a reversal is imminent. Okay, what do I mean by a reversal? Of course, you would know that price will shoot back up, but very soon, reversal is going to happen in the future. What do I mean by reversal? Like price is really going to fall. Like for instance, if we are in a bullish move, it will get to a point whereby there's going to be a reversal, like there's going to be change in direction. Price is going to change direction and then start going back down. Okay, but if I was in this market and price hits this zone, this 0.68, okay, price, look at this long wick here. It didn't get to this 0.7, so it is safe to say it is at this 0.6. Look at 0.6 here, okay? Here, I will not hesitate to actually take a bullish setup. Though there are some other factors I'll be using as a technical analyst. I'll be using other factors to confirm my trade. But we're just talking about basically the Fibonacci principle. Okay, so this is how to know where price will retrace to and where most likely price will pick up and start to go back in that direction it was actually going. Now, in this case, price started making that bullish movement here, got to this point, and then retraces to this level. And you could see, so you watch out, you'll be watching when price is retracing. Of course, you must have drawn your swing low to your swing high, and you're waiting for price to come down to the level. So you'll be watching out for these levels, these 0.2 or 0.3. Mostly price always reverses at this point. And sometimes it comes to this point, the 50%, 0.5 simply means the 50% level. And of course, I know you always hear that, and the 0.68 level. So these points are just an important zone. When price is here, it just tells you like, okay, it gives you this confidence that, okay, this guy is about to reverse back to the upside. And of course, you have to use other confirmation. I'm not saying once you draw your fib level, because you see price came down to 0.23 or 0.3 or 50 or 60, and then you jump in. You know, you have to watch out for other factors as a trader. So you need to know technical analysis very, very well. Look at the candlestick formations, look at demand and supply, look at so many things before you take your trade. Then you see, now watch what happened. Price came down, got here, got to this point, to the 0.6 level, and then price started going back up. And watch what later happens. Price, price fell back. You see, price fell back. Okay, so this is how you just basically use your Fibonacci retracement. It's just simple. So if price got here and then came back, I can actually draw my Fibonacci 2 at this point. Okay, look at it. After this high, price made a new high. Okay, it's just like price moving in steps. When price made this low, moved down here, made this high, and then retraces to this level. And when I had this here, it was at 0.68 level. Okay, and then price started going back up, and then price went to make a new high. So let's mark out that new high here. So this is a new high price made. Sorry. So what we do is we go and select our Fibonacci. sorry, let me delete this. Okay, so let's select that Fibonacci again. Remember, I favorite my own. You come back to your swing low, or you can as well use this low. Okay, you can as well use this low. You come back here, and then you come here. Okay, swing low, swing high. Look at the level price. You can extend it so you can actually cover, but make sure it is touching the tip of the wick, the highest wick, this highest wick, and it's touching the tip of the lowest wick. Okay, so you can have an accurate. Now see what happens here. Price went up and then retraces back again. Now this time, price broke through this 0.618 level and then came back to the 0.786 level. And before a reversal actually went up. Now, always bear in mind that when price is at this level, this 0.68 and 0.7, a reversal is imminent. Now, what irrespective of which move, which of the direction you're in, if you're in a bullish uptrend or in a bearish uptrend, always have in mind that once price is at least 0.68, price is evidently going to reverse in the future. And look at what happened here. Price got to this point here and then fell back to the ground. Okay. All right. I don't know how much time we've got. There's a lot to talk about this, but so let me just show you how to use Fibonacci in a downtrend. Okay, you want to know where price will get to before price will reverse to the upside and then continue the downtrend movement. So let's delete this guy. So let's delete these guys and then let's see how to use a Fibonacci tool in a downtrend. Okay, quickly, I'll be fast. Now, let's assume that price got to this point here and price started selling down. So you want to know where price will get to. Okay, price will retrace to before it continue a sell. Now, as a trader, when you want to know the direction of the market, you always do your top-down analysis. Go to the high time frame to know the direction of the market. So let's assume we came here and then we saw that, okay, price is in the downtrend and we want to join the trend, but price has already moved. Let's say price is already at this point, okay? So what we'll do is just wait for price to, make that major low and then reverse. So when price reverse, so let's assume price came all the way down here, stopped here, and then price started going back up. Okay, now you have basis to draw your fib tool so that you will know where this guy's movement, where it will get to before it will start to sell, then you can join. Now you come here, pick your fib tool. Now in this case, for a bearish trend, you don't draw from what? From your fib low to your fib high. You draw from your fib high to your fib low. Okay, so I'll come here. This is the highest point price got to. So I place my tool here, come here, and then what? And then draw this guy down to this low. And watch what happens. Price retrace. Price got to this 0.618 level. You see, price got here. And of course, if I look at this critically, I can see a candlestick confirmation here that tells me that it is time to enter a sell here. Okay, so fib is just for you to be able to know where price will get to before price will continue in its original direction it was. Price always move. There's always pull, impulse and pullback. So this was an impulse movement to the downside, and this was a pullback. So at this pullback is where we're actually interested. We want to know where price will get to before it will continue back in that impulse movement to the downside. So this is basically how to use your Fibonacci tool. Okay, maybe some other time there's time I can go in depth. There's a lot to this. You can as well tweak this. You can do your settings. Like for instance, if I click on this tool, okay, look at this button here. This is settings, and these are colors. So I just come to the settings here. Okay, come here. Look at all of the settings here. Okay, these are all of the settings. If for me, I like using one color so that I don't get confused. So if you want to tweak this guy to one color, you can come here. Look at this menu here. Let me use this guy to mark. Okay, sorry. Okay, let me use this notation. So let me just click on this guy. All right, settings. Then now you scroll down. Look at this. Use one color. Look at this place. Use one color. You can use that. If you click on it, see, I want to click on white. You see, it has changed. All of the colors has changed. Okay. All of the colors has changed. Then what next? I want to come down. I think that's just also coordinates. Well, and when we go deep, I'll explain all of this, how you can actually use this to your advantage. But basically, as a trader, what you should need is just how to, find out about your swing low, swing high, and the possible point place price is, like most likely to reverse. Okay, so this is how to know, how to use your Fibonacci retracement tool. So let me talk about how to. There's another tool
So
that talks
Daniel,
about.
please, before you proceed,
Oh, Newton, not Daniel.
sorry, it's him. So I want to understand that, first of all, thank you for the impromptu class. So I want to understand from all indication that there are values that controls this retracement, uptrend or downtrend retracement. So, and you were a bit fast, and I know that just like we know that while using RSI, we have a specific range that we say RSI at this level is overbought, RSI at this level is oversold.
Yeah.
So and in the same thing is applicable to Fibonacci. There are specific range that this Fibonacci will get to, and we know that price is about to retrace either way, uptrend or downtrend. So these are the values that you need to calm down and let us know that when you draw this fib at this level, just take it step by step, take it easily.
Okay.
At this level,
You
when
know,
the
you know
price
why
gets to,
I understand. You know why I was a bit far, because I was actually responding to your message. But okay, let me just
no, I
explain.
know, but we were not even picking up the values. I know I said you should go talk to us about fib, do you get?
Okay.
But we need to pick these values because they are what is going to help us to know that when the value for uptrend reversal gets to this place, it's going to come down. When it gets to this place for downtrend reversal, so let us pick this value, because without this value, it would be like we just learned how to draw fib, but we cannot identify whether it's due for reversal or not. Please take
All
the
right.
values bit by
Okay.
bit.
All right. Okay. Okay. Let me just hold on. Let me do this. No problem. I will take it slow. So because the essence of this is just for you, everyone here to understand basically how this guy functions. Now this is it. We have like I told you, these are percentages, okay? And these percentages, these values here represent a price point where price movement and point where it gets to. So this is just more like when you have how do I explain this? Okay, when you have an icon that represents, for instance, now this Fibonacci tool, this is more like an icon that represents Fibonacci. So when you see this icon, of course, this is a Fibonacci tool, and then you click on it. So these are just values that represent levels price possibly might get to. So when you hear 0.236, oh, price got to 0.236. Okay, you would, of course, you will know what it means. I'm going to explain. Then price got to 0.382. Now, you see, for me, based on the experience I've had with this guy, using this guy, when price is here, okay, when price gets to either of this place, 0.236 level, okay, or 0.382 levels, that tells you that it's, the momentum, the trend is actually very strong. Okay, so if price is actually moving like this to the upside, price is in an uptrend, and then price now reverse, okay, retrace, and then came to either this level or this level. Bear in mind that trend is very strong. So the continuation of that trend is really going to be, when they say rally, price is rallying, price is going up. So price is really going to buy for a very long time before any major reversal would happen in the future. Okay, so bear that in mind. So, but if price comes to this level from this 50%, okay, to this 0.7, though price hardly come to this place. When price comes here is when maybe there's a reversal. Price is making a reversal. Like if price is going up and then price wants to start coming back down, price will, it will always break this guy. So these are the important levels: 2.36, 0.382. Now 2.3 0.236 and 0.382 represents a zone, a level whereby where price gets to, it gives you signals that, okay, if you're able to catch up with the wave at that time, if it is in a downtrend or in an uptrend, whichever trend price is really going to sell very, very well, or price is going to buy very, the trend is very strong. Let me use that term. That trend is very strong. It's really going to, price is actually going to go to that direction in a far, it's going to go far in that direction, whatever direction you're drawing your fib on, either in an uptrend or in a downtrend. Okay. And mind you, you don't use Fibonacci tool in a ranging, in a consolidation a trend. Fib only works for an uptrend or a downtrend. So now in this case, we want to draw fib. We want to draw fib for an uptrend. So we want to know where price will retrace to. Then we take note. We observe the zones. Where, like for instance, like this zone. This is the zone. This is the zone. Like we want to know where price will get to, and then most likely start to reverse. So if you're able to see where price gets to and then reverse, and then we catch away, okay, we'll know that, oh, this guy is going to buy for a very long time. Okay, it gives you that sense, okay, this guy is going to buy for a very long time before there's a reversal in the future. Then if you're able to catch up with the wave, then you catch up and then you enter the trade. But once price is at this level, 0.5, 50%, or 0.6, 60%, this means 33%, 38%, and then 50%, and then 60%. Or here, these three levels, 1, 2, 3. Okay, there is going to be a reversal. Like for instance, we're in a bullish movement, and then you draw your fib. You want to know, okay, this guy has gone up. Where will he retrace back to before he starts to continue his movement to the upside? But once price is at this level, bear in mind that even though price is still going to continue in that direction after retracing down, but a major reversal is imminent. Okay, so mostly they call this 0.618 a golden zone. Like once price gets here or here, it tells you that, okay, this guy is going to go up, but it's not going to go far. Or this guy is going to go down, but it is not going to go far. So whatever profit you're looking for at that point in time will be a short-term profit. Okay, then it also will prepare your mind that, okay, once price, like for instance, let me use price goes up, and then and then came back here, and then start to go back up. Okay, start to go back up. You will know that, okay, this guy is going back up. You are in this trade already, but this guy is not going to go far. So you'll be at an alert. Okay, now you'll be looking out for possible maybe a resistance, a demand and supply zone, a nearest demand and supply zone where you're looking to take your profit. And then once you take your profit, you now observe, you wait to see what price will do at that point in time. And then, of course, there's always going to be a reversal. Then you know how to enter the trade and then start to sell back. So now let's draw our fib for a buy for an uptrend. Okay, let's draw our fib for an uptrend, and then we'll see which of the points price gets to and what happens eventually. So this is a 4 hour. You can draw your fib on 1 hour or 15 minutes, depending on what time frame suits you. I like using 4 hour. Okay, it gives me gives me a very grounded data. So let's say from here. Okay, let me use a replay button. I think I have access to a replay button here. Okay, so sorry. Okay, all right. So yes, let's use here. Let's use this one. Let's use from here. Let's say price started moving from here and then got to this point. So let's use from here. Okay. All right. So let's use from here. Now, I wanted to enter this trade, but this trade left me from here. I've been monitoring this ranging market, and I went up and came down from here, and then the trade left me, and I was angry. I was like, "Oh, why did I miss this trade?" I said, "Okay, then I'll wait for a pullback, and I'll enter." So now, remember, this is the lowest point price got, which is my low point. Okay, swing low, and price now got, and I was in market. I was watching this guy after it has moved. Then price now got here. I see that, okay, this guy is coming back down. Now let me quickly draw my fee to know the possible point where price will get to. Then I come here, I select my fee tool, and then draw from my swing low, okay, to my swing high. Okay, let me expand this. So always ensure that it touches the lowest, that's your wick, the lowest wick and the highest wick. Ensure that it touches it. Okay, now we have we've been able to draw our fib level. So we are waiting to see where price will retrace to. Okay. Now I am interested in this zone because let's say price has moved, and it has gotten to this highest point here. So let me play this guy. Let me play this guy a little bit. Let me just play. And then let's see where this guy will retrace to and see what value and see what it means for us, how we can use that to our advantage. Now I'm playing this guy. Okay, so let's see what happens here. You see, price went and we couldn't catch up. Then we drew our fib. Now, what price again? Price came back down all the way to what? Can someone tell me? Can you see the value here? Can someone tell me if you're actually listening to me? Can someone tell me where price got to and then before a reversal started going up? Can you tell me the value? Can you see if you can see my screen? Tell me. Can someone just tell me what value you can see? Let's make it interactive. If you can hear me.
0.6.
0.6. Thank you very much. Now, if price gets to this 0.6, of course, before this bullish reversal happens, of course, I would know what is going to happen. So I'll be here. Oh, so this guy is here now. Fine. So this guy is still going to continue its movement after my entry confirmation. Of course, I always want to know how to enter this market after seeing some candlestick formations here, candlestick patterns formation there. And then let's say now I am now in the market. Now I'm going to bear in mind that, okay, although this guy is still going to start moving to the upside, okay, but this guy's major reversal back to the downside is imminent. So this guy will not really go that far. So whatever profit I am I'm looking for will be a short-term profit, okay? Now, so what I will do is I'll just I'll look to my left, okay? If I want to take profit, let's assume let me use this, okay, sorry, let me use this to mark. Let's assume I got into the market from this place. Okay, let me use this color. So let's assume I entered the market from here, okay, and price started going in my favor. Now I want to look for where to take profit. Since it's going to be a short-term thing, I can actually look at this resistance here, this next resistance here, and then take my profit from there. Okay, so I can place my line here. All right, so place my line here. Okay, and then enter this as my take profit point. Okay, and sometimes I could I could actually trail my profits. Maybe I don't want to take here, but once price gets there and price move past, I can move my stop loss from where it is, and then look for a point where I'm going to you should know how to trail your. I don't want to start explaining that. You should know how to trail your profit. And let's say this is the next supply zone for me here. I just come here, just mark the place, just mark the place. Sorry. I just need you guys to understand. Just mark anywhere. This is another supply zone for me. I could mark here and say, okay, when price gets here, of course, I will take my profits. So let's assume this was where I marked this highest point here. Let me shift this guy so I can see very well. So let's assume this was where I marked for my take profit point, this place, and I input my take profit. And then let's see how price reacts. So let's go. You see, price hit my take profit and then went past. And I watch what happens. We're just using this as more like a practical, you see what happens. Can you see what happens? See that major reversal? Do you see? And let's see if price come back to invalidate this last low that we had here. Okay. So this just tells you that, okay, this guy retraces at the 0.61 level. A major reversal is imminent. So this will prepare me. This is a double top, if you observe. This is a chart pattern. You see, this is a double top. Price has made this double top. And look at it. When price made that double top, price, look at it here, look at the neckline here. Price broke the neckline and then came back for what? For another block that is left behind. Let me see if it picks the other block. So there are a lot of factors you can actually use to confine your trades. Okay, so let's assume, oh, we've seen this double top and price has broken this trend line. Okay, and look at the candlesticks patterns here. Look at candlestick types here. Look at what's happening there. There was serious price rejection. This is an inverse hammer. And look at what happens here, okay? And finally, a bearish engulfing candle forms. And maybe like after, what I normally do is I wait for that bearish engulfing candle to form, and I allow the candle to pass to engulf the green candle completely, and then enter from it, and then I put my take profit. I put my stop loss above, just slightly above this candle, in case price decides to reverse. You can stop me out. I don't want to lose that much. Then see how price came down. So this is how this thing works. So now I've taught you how to use the bearish. So instead of looking at drawing your fee from the swing low to the swing high, what you do in the bearish scenario is just pick up your tool. Okay, so let's assume price has made a movement to the upside. Okay, from here to this here, and you want to know possible place where price would get to before it will reverse and start to come back down. Of course, you just pick your Fibonacci tool. You come to this swing high here, down to your swing low here. Okay, let me explain this. And look at price came all the way down. Okay, came all the way down, and then start to move back up. And look at what price did here. Price retraces back at what? At 0.786 level. You see, price, and then price went down. Price went down, and after a reversal, see what happened. Price went back straight back up and came back to the previous high. So see that this is just how to tweak this to your advantage. Basically, there are other ways you can use this. That will be for some other time. And there are ways you can tweak these settings such that it will tell you. Anyway, let's leave that for some other time. Your entry level and your take profit point as well. So many ways you can use it, but the basic way and the most common and most effective way, very simple way, is this way I've just explained to you. Okay, so it gives you that sense of preparation. Like, okay, when price gets here, okay, this is what happens, and when it gets here, okay, this is what happens. So remember, your 0.236 level and your 0.38 level, always signify a strong momentum. Whatever direction the price is still going to go far. Okay, and then your 0.5, your 0.6, especially your 0.6 is referred to as what's the golden zone. Anytime price is here, a major reversal is always imminent, even at this 50%. But I always look out for 0.168 and this other level. Okay, so this is how to use your Fibonacci retracement tool. Okay, so before I take your question, let us move to how to use the Fib-based extension. Okay, now a Fib-based extension is still an extension of Fibonacci, but what you use a Fib-based extension is you want to know okay, once price makes a reversal, you want to know where price might possibly get to so you can take profit. Golden value. Thank you very much for that reminder. Golden value. Thank you so much. Now, using a Fib-based extension, you want to know that you want to be able to find out where price might likely get to after the retracement has taken place. After retracement has taken place, when we drew our Fibonacci, okay, thank you so much. When we drew our Fibonacci, we were able to find out possible points where price would retrace to, and then start to go back and then continue in its direction. Now, a Fib-based extension, what we're going to do with a Fib-based extension is, once price has retraced, we want to know where we can most likely take profit. Do you understand what I mean? What I'm trying to say is, let's assume that price was moving up, and then eventually price now what? Retrace. Okay, so we've been able to, this is our swing low and this is our swing high. Okay, so we now drew our what? We drew our Fibonacci for swing high to our swing low. Okay, all right, and our price now retraces back to what? To our 0.618. Now let's assume that we now enter the market here. Now we want to know where this new movement now price is about to make. This new movement, we want to know where price we might possibly or might likely get to, so we can take profit. So that is when your fee-based extension now comes in. Okay, so let me just quickly drink water. Okay, so that is where using your fee-based extension now comes in. And how do you use your fee-based extension? I will explain to you. Let me clear this guy. Let me clear this guy now, so that I can just go in. Okay. So let me remove this guy. Now you know how to select your fee-based extension. Of course, you can always come back to this your left palm. Of me, I favorite one. Look at it, a trend-based fee-based extension. I already favorite it. That's why I have it listed here. Okay. So I just come here, I just click on it, and then I come here. Now, when you're drawing your Fibonacci 2 extension, remember your Fibonacci retracement for a bearish, for an uptrend, you pick it up from what? From your swing low to your what? Swing high. Okay. So let us use, let me see. Let's come here. So this is a swing low, a swing high, and price retracement. So let us use Fib extension now to now see. Let's assume, okay, wait, let me do this again. Yes, I want to use it. So let me do this again. Let's use a replay. So now let's take it from here. Now price is making the move from here up to this point. Okay, I'm going to make it fast. Don't worry, it's going to be very fast. And then we want to catch up with the retracement. Okay, and then we want to know where we can possibly take profit. So let me cut this place off. Price making. Okay, let me cut. This is retracement. Let me just cut here off. Okay, all right. So first of all, so we missed this move, and price is now retracing here. So we want to enter. We want to be able to know where price will retrace to first. We can use we are using this guy, this Fib trend-based extension for two purposes. You want to know price has already made a move and it traces, and you want to know where price will get to, so you can take profit. So you just pick it up. Now this is for an uptrend. So you pick up with your your swing low, you drag it up. Make sure you drag it up to your to your swing high. See, look at my cursor. I'm trying to look at where I place it on top of this guy. Okay, you place it there, and then you drag it back to where price has already retraced to. Okay, let me do something so that it will be very clear. Let me play this guy a little bit so that we want to get the retracement point first. Let me just check something. Okay, so let's assume this price made a move from here, swing low, swing high, and this is where price wants to, after drawing your remember your Fibonacci, you draw from your swing low to your swing high, and price is retracing at this 0.618 region. Okay, now you want to know where you might likely, or you might like a price will get to. Price might likely get to, so you can take profit. Okay, you want to have an idea. Trend fee base can actually help you. So you click on it, come here, draw your swing low, put it on your swing high, and then come back to where price you trace to. Remember the last low before price started going up. Place it there. Okay, now look at it. So now this is the point, the value you should take note when you're using a trend trend extension. Okay, now take note of this one, and then take note of this. So price will always Someone wants to say something? What I
No,
do is, okay, what I do is now, if you observe something, if you observe this level, this O number, this 100% level here, okay, and then observe this. Now, these are the 2 points. So you see this region, between this region and this region, inside here is always advisable that once price get past or even touch this 100%, you might want to take a profit, okay, or price move past, and then anywhere around here, you also want to take a profit, okay. Now, bear this in mind. 2 scenarios can happen, so you would know. If price actually retraces, let's assume that this guy that retraces. Remember what I discussed about the 0.236 level and the 382 level. If price retraces at this point, this 0.2 or 0.3, the trend is usually very strong. In this case, this bullish trend. So price might likely get to this level and even go past because of this strong bullish movement. But if price retraces at the 50% or the 60% or the 70%, then know that price might not really go that far and most likely might retrace at this 0.7 or this 100% level. So once price just hits this 0.7, you can move your stop loss, just slightly below that level in case price decides to reverse there. At least you take a profit. Okay, it stops you out. So in this case, price actually retraces at what? At the 0.6 at the 0.6 level when we use our Fibonacci retracement. Remember, when we drew up Fibonacci, it was at the 0.618 level price retraces. So I am looking to when price gets to this 0.7 or this 100%, I take my profit. Now at this 0.786, observe what is going on here. This is actually a critical zone. This is a resistance. Okay, so what I'll just do is I'll just use my ray tool. Okay, this is horizontal ray tool. I'll come here. I just mark this guy, this line. I mark this guy out here. Let me just mark it here, and I use that value to take my profit. Because the reason why I want to place here is because I know that price has retraced at the golden value, at the golden zone. Okay, so it might not really go far. So because a major reversal is imminent. Okay, and I could also say I will take profit 2 here at this 100% level. I'll just place it here. Now, how do I take profit 2? Once price hits this my level, this is my 0.78, and it goes up, I'll just move my stop loss from my entry point because I will have breaking even from here. I'll move it down here and then wait for price to do its thing. If price hits this level, because I will have removed my take profit from I won't set any take profit. I'll just wait for price to get here. And I see that price move past, I'll just quickly set my stop loss here. Okay, so if price do shakara and manages to come here, I take my profit. Okay, but if price actually if the trend momentum is actually very strong, okay, what I'll be looking out for is I'm looking out for within this space. I can decide to bring my take profit, bring it down here. Okay, and if you look at it, this is actually what a supply zone here. There's a supply zone here. So I just, for safety reason, I just put my take profit here. If price goes past this place, I can trade. I can move my stop loss, move it here, and then wait for price. If price come back to this place, fine. If you stop me out, I'm already in profit. Okay, I'm already in profit. So this is how to use your feed trend extension. It's just very simple. Okay. So if you don't understand, you can just tell me. I can quickly just go back to explain. So
we have a question.
Okay, let's see how this guy goes. You see what happened here? You see? Did you see what happened here? There was a major what? A reversal. Okay, and price started going back down. A double top. So this is just how to use this thing. So, all right, you can ask a question. Yes.
Okay, Pastor Kayode, can you ask your question?
Good evening, everybody in the house. I
Good
really
evening.
appreciate the powerful presentation. But I have two questions to ask Sir Amma. Now, this today training, can we get the record today? The network is not clear at all. There are some of us that came late, and even when we came late, the network just going up and down. But if you can get the recording, we can listen to it tonight to brush up our memory and to practice it. That's question number one. Question number two is that I know that our teacher is using laptop. Can you demonstrate it on the phone? Because 80% in this group, most of us, we are always with our phone and we can do the analysis. It is possible for you to demonstrate it with phone,
what you see here,
not laptop.
what you see. Okay.
And sorry, I'm calling you. Atman, when you are done with the desktop view, Daniel could take us through the mobile view.
Okay.
I don't know, Daniel, if you are still on the call, if you can just run a summary of the mobile view with Binance so that those of us that does not trade on trading view can also get a little knowledge on how to use it on our Binance.
Let me show you something. You see, on your Binance, you get just on your, okay, let me see if I can just log in. Or is Daniel here?
Yeah, Daniel is maybe we can get a different view too of it.
Okay, Vizia, you can actually take over, no problem.
Daniel, are you here?
Okay, Julius, before Daniel comes on, somebody has a question. He said the word retracement is what is confusing me. All right,
The
now.
person, okay, go ahead. This person must be very new in this class. So I know this is a newbie. It's gonna take us back. I don't know whether I will refer the person to our YouTube channel to go through it, because the word for the person to ask the question means that there's a lot that the person doesn't know.
Yeah.
So Daniel.
Hi Juliet, can you hear me?
Yes, we can hear you. Please, can you share your screen on Binance? And
okay, so I was actually having issues with unmuting on my phone. I actually okay, so let me try again. Can you hear me? Can anyone hear me?
we can hear you.
All right, so let me go straight to my Binance. I tried to make a screenshot of Binance so we could actually see what I'm trying to say. So when you get on your Binance, I'm using Sushi as an example. You can see where I try to use an arrow.
You're not sharing your screen yet.
Oh, apologies. I thought I already did. Okay, is my screen visible?
We can see your screen.
All right. So I made a screenshot of the Sushi homepage. So when you're on Binance, where I'm pointing the arrow is where I was trying to get us to see. So that arrow will put your phone on landscape mode. So when your phone is on landscape mode, the next thing you're going to see is this screen. The screen is going to look this way on landscape mode. I have also highlighted the pen that I was trying to show us. This is the pen here. Is on the top, the bottom right corner of your screen if you're using an iPhone. But if you're using an Android, I don't know where that will be situated, but you can see the symbol It's actually the last symbol if you are looking at your right corner. Am I still audible?
Yes, please.
All right. So when you actually click that, when you see this, it's going to show you the indicators. So you are seeing the MA, the EMA, and the Bollinger Band, as well as the volume indicator, the MACD and the KDJ, as well as RSI. So you click that pin symbol, and you are going to have that same symbol line will change to this. Can you see where I mark that arrow again?
Yes.
All right. So that is a foot arrow. That's a foot symbol there. That foot symbol is your Fibonacci retracement, which Newton has done a whole lot of discussion around. So what I'm just going to do is show us how we use this on Binance. And I'm going to just use Sushi to show us what I'm trying to say here. Okay, so using Binance, the view is not going to be as elaborate as trading view. So I would also advise, just like Newton mentioned, if you can also learn trading view, it will really be handy for you here as well. So you pick up the tool using the last swing low, connect that to the swing high. You can see that Binance has a lot of limitation, because, for instance, you have to do a lot of adjusting to get the bottom wicks to match with the top wicks as well, so that your charts can look neat. So let me do that again. Just like Newton showed us, you're going to pick the tool at the top right corner. Depending on your phone, it might be on the left, it might be on the center. But when you pick up the tool, it will be highlighted. Place a dot. You see the first dot on the bottom. And just like Newton said, is at the lowest point on your chart, the closest lowest point on your chart. Pick that up, move that to the closest highest point on your chart. So then on Binance, you can see that it might not be equal. You can now pick that last point. You can adjust it. You can move it up or down. It's movable. It's actually movable. So you move it so that it matches with the last point that you see here. The last point here. Then the top also, you ensure that the top is also at the top, the highest point up there as well, as close as possible as you can get it. Okay, so let me make these numbers visible for us. So on the group, can everyone see what I tried to do there?
Yes.
So let me come back to Zoom in case, so that I can be sure that we followed to that point. Please, if you did not get what I just did, say no. If you got what I just did, say yes, before I go back to explain what the numbers mean. Okay, we're having a lot of yes. Okay, all right. So, okay. All right, let me go back. So, if you remember on our chat yesterday, I was on the sushi trade, and I told us that my TP1 was at this number. Someone said no. Okay, let me go back again. Please, the person that said no, were you able? Do you know how to even get to the FIB tool, or should I start all over?
They can reference the Zoom. I think Newton showed us how to get it.
Okay. All right. So, just like I mentioned, you start here. The first point is here. You enlarge your screen to landscape. The next point is picking this one that I'm circling here that looks like a pen, pencil or pen. Then after that, you get to the fourth point. Let me enlarge this picture. The fourth point that looks like forward and backward, forward and backward. You pick that one. That's the fourth symbol on the screen. If you're using an iPhone, when you do that, what you are going to have will look something like this. Your screen will look like this, and you have that tool highlighted. So what you do is pick the point at the bottom, and then drop your pointer there and move it up to the point at the top. And that is just your fib drawn the way it is. If you are not okay, you can say delete button, then you delete it again. And you can redraw it again. From the bottom, pick a point, draw up. If your point did not match well, you can adjust it as much as possible to fit into the bottom corner and move the one up here to fit up here. If the numbers are not visible, you move it to where you can read the number properly. Is that understood? Please, I'm not on the chat, so Juliet, you'll be the one that can let me know if
Someone said that if you start over.
Huh?
I don't
worry,
know.
The Zoom call is recorded. So you can actually go back and rewind that particular point. Okay, let me just do it one last time. One last time. All right. Let me do it one last time. When you open your Binance and choose a trading pay, let me use Sushi for instance. Use Sushi USDT. You see where I'm pointing this arrow. There is actually a symbol there that has two arrows pointed up and down. Click on that arrow, and then what you will see will look like this. Your screen will change from portrait to landscape. Then you will do what? You see these symbols this way. They might not be exactly like this. I'm using an iPhone. This is what you will see.
Let me share my screen and show them before you continue.
Please click share your own screen since it's actually an Android.
Let me share my screen and show them before you continue.
Okay,
so
please.
That they will understand. I'm still gonna use the same Sushi.
Yeah.
Sushi USDT. So first, this is where this is the tool here. So change to landscape. So once you change to landscape, you click on this. Oh my gosh. I don't know. The screen is not capturing it. Okay, look at this where my highlighter is pointing. So once you tap on it, this is the fib here. Oh my. This is the fib. This one I'm cycling. So once you tap on it, I'm still learning. You want to draw, for example. Oh my God. Then how do I remove it? I want to do
You see that delete, just click on it again. Click on it again. You see the delete button here. Just delete it. Click on it again, delete it. That means you draw more than one. Or you just use the eraser date to erase it off.
I can't see the eraser.
Is immediately after that is a second to the last symbol. On your right, bottom right, second to the last symbol. Yeah, delete all drawings. I mean, the drawing no one disappear. Choose another symbol. Use another one apart from the super. Your banner is hang.
It's still there.
Use another symbol instead of super. You can continue with another symbol instead of super. Thing is gone. Manipulation.
This is a fib, right?
Yeah.
So the problem is I can't how to expound my phone. How to expound it.
The way your Zoom is looking is different from the way my own Zoom is. My Zoom doesn't have all these functions.
This is Samsung.
Yeah. Okay, maybe. It doesn't have all these functions. Or maybe my one iPhone, I've not updated my Zoom
I've been
enough.
able to draw it so plenty.
Yeah. The thing is that now you have drawn like 3 or so. Yep. Then don't use a drawing cursor again. On highlight that fib from that, because if you have it highlighted, it will keep on drawing as many as you touch the screen. Yeah.
So can I drag it?
Yes, you can drag it. So you can drag from the top and the bottom to the point you want on the screen. So just click on it. You are still on the fib. You are still using fibs. Just tap on that, the old one you drew. No, you're highlighting it again. You're highlighting it again.
Like,
I think your Binance is crazy because you've actually not highlighted the Fibonacci, but it's still showing as selected.
so maybe you can proceed. I just wanted to show them where to get the fib. We can practice it after here.
All right. Let me share again. Okay, you have to stop sharing for me to share. All right. Okay, so let Binance come back. Sorry, my network has not really been. Can you hear me? And can you see my screen?
Yes, we can.
All right. So we take the 2 and pick the tool, and then the lowest point to the highest point, the lowest point to the highest point. Let me just do something else so that we can see that you can actually adjust this thing on your screen. So let me say that I didn't move this with the lowest point and the highest point, that I just randomly picked a point like here and move it up, right? So after doing that, you don't need to select the fib again, because if you select the fib again, it will draw again. So I'll delete that. So you don't select the fib again. Rather, what you do is click on the last one you drew, move that top point up to the topmost point, and then drag this lower point. You see that the fib is highlighted in two areas. You can see 2 points are highlighted. Those are the points you can use to drag the fib to the highest and the lowest points respectively. So the lowest point here, you drag this down here as much as possible. It might not be as accurate as you want it, but it will be within the range. And then up here again, you ensure this one comes as close as possible here. So with that in mind, we can see that our currently the trend just reduced to 0.236 on the fib level, which is actually 23%, roughly 23%. So the lines here, the numbers here, actually percentage. So in a strong uptrend, your retracement will not be more than 30% retracement. But in a weak uptrend, your retracement will be larger, like what we are currently having in BTC now. The retracement is very, very large. So what I was trying to say was that yesterday, I told us that my TP for sushi was somewhere around 1.4 something. That was because when I drew my fib, I discovered that the first retracement, 23% retracement, was at that region. And if you look at the fib retracement, it gives you confluence, as it corresponds to your market structure. Look at this retracement now. Can you still hear me?
Yes.
Okay. If you look at these retracements now, it matches with the market structure. What do I mean? 0.236. If you look at that place, you can see that that's similar to the support and resistance level on sushi. You can see that up here at 0.26 was a level that sushi was hitting resistance or support. If you move it down, you can see that every single fib level corresponds to a resistance or a support. And just like Newton mentioned, we have the key ones. We don't really use all of them, but although all of them are important, but we have the key ones, the 0.618, the 0.5, the 38. Those are the very most important ones, because those are the ones that market most often retrace to. And then we have the 1 fib, which means that this pump that happened on sushi, if we have a full correction, sushi will come back to 0.972. That is if we have a full correction. So how do you use the tool so that you don't just know how to draw it without actually using it? So if, for instance, if the market moved as high as it went with sushi and you feel that you want to take a quick trade, I like using the 1-day chart because it gives me less error. So you take it from the lower points, right, to the higher point, as we have discussed. My first TP would be at 0.236. I believe that since I don't really know what the market trend will look like, if the market gets to 0.236, I should take some part of my profit. So if you enter a trade with $10, for instance, and then the profit you've seen is probably, let's just say, at 0.236 retracement, you have already seen 15% on a leverage trade. I would advise take 7% of that trade and allow the remaining 7% to run. Why would I say that? Because you don't know if Sushi was just having a retracement before continuing back the uptrend. So Juliet gave us a video on how to set your stop loss and take profits. So if you had set your stop loss initially, your stop loss initially for this trade would have been above 1.58. And then the trade moves to 1.442, which is 0.236 retracement. You are encouraged to move your stop loss halfway between those 2 points, so that if the market comes back, it does not go back and hit you in loss. Because this market right now is super manipulated. So Sushi can decide to go back again to this 0.236 and then pump back up. In that way, all the small money that you have gained, you lose it and then it will hit your stop loss. So to ensure that you break even, or even not even break even, to ensure that you take partial profits, if you miss your TP1, take some things off the market. The market is not your own. It's not your father's market. You have to ensure that you take whatever you take as profit is your money. The one you did not take is not your money. The market takes it away from you. So if you move your TP, your stop loss halfway through, and then, for instance, if Sushi closes today's candle below the 0.236, we can say that it will continue the downtrend. But currently, Sushi does not look like it's going to do that. So you can see now that it was just a 23% correction that it did, and then it has retested that support level, that support level now, and it has confirmed that support, and it's going to go back up again. Other things being equal. So that's how you use your FIB in correlation with your support and the major trend of the market, as well as whatever BTC is doing at the same time. So that's how you draw it on Binance. Once again, I will try to show us so that we see how it's done. Change it to landscape. Pick up this pen here at the bottom. Pick your FIB tool. Drop it at the lowest point. Increase to the highest point. Adjust it as you see fit. And that's your FIB tool. Place your stop loss above the last point, and then your first TP should not be too far away from your 23% correction. The market hardly moves very volatile, except on the days that we have news. That's when the market will go above 30% correction in a powerful uptrend. So that's just how to use this. I don't know if we have questions for myself and Mr. Newton, because I think he did a very thorough work.
First of all, I want to compliment Newton and for the initial class. That was a very awesome one. At least it's my first time of coming to hear about FIB and seeing how it's being used. And also thank you, Daniel, for the expansion of it. So someone asked about it. Won't be nice that I didn't respond to that question. And but before I proceed, it would be nice that you guys help us in the group chat identify these points where we get possible pullback or reversal. So if you can identify them and explain them and drop to us, so that while drawing it, we can memorize it and have it registered in our head. So please, we would appreciate that.
Okay.
So somebody that asks about retracement. So retracement is just a technical term that will basically use to identify a minor pullback or change in direction. So sometimes you see a coin moving in uptrend direction. Once it gets to a certain resistance level, so it might want to cool off or do a pullback. So we'll have a recording where we talk about resistance and support levels. So you might also need to reference our YouTube channel. So when we say resistance is a place where a price of an asset gets to and stop moving, possibly we'll see some sellers, lot of sellers at that point taking profit. So that's why when it gets to a resistance level, it's not moving further again because there is no buying force to push that asset further from where it is. So at that point, even if it's going to continue moving forward, if we see some selling points, some sellers there, so it's going to pull back a little. And even if it's going to continue moving, there's going to be buyers too to push the buying force up. So what we mean as retracement is a certain level where we can see resistance. The price gets to that point and maybe some people are taking profit and it starts pulling back. So it's a technical term that we use in crypto market or forex market to identify a possible minor pullback in a trend. So I hope I'm able to answer that question. We could also take further questions from other people. Now, I know that this is the first time we're talking about FIB. It might not be too clear for us. We would also appreciate another class. We would appreciate it if we can re-emphasize on it again and some other time so that we will pick it very well. So at least now, I also expect that we on our own can visit YouTube, try to do some research by ourselves and learn more too. Because from what I can see, it's not too difficult to grab. It's just that when you are hearing things for the first time, it might look strange, but by the time you try to help yourself, you could learn more. So let's pick Blessed question. Blessed, please, can you ask your question?
Hello, everyone. Good evening.
Good evening.
Thank you for the opportunity of this lecture. Thank you, Daniel and Mr.
Newton.
Okay, Newton. Thank you. They are really teachers, not anyhow. They are really teachers. This is well explained. But my question here is, at that point, after drawing the fib, that 0.236, the prices are not there. Supposing one wants to take profit or trail loss, the prices are not there. How do we know the prices? You use Suchi as an example. How can we know the prices? Is the price attached somewhere? Because I was zooming it to see if I can see the price when it gets to that 0.236. I don't know whether you get the question. Or do we assume? I don't know whether you are there.
I'm unmuting him.
Okay. Because when you draw that line, the prices are not shown.
Any of okay.
Okay.
Can you hear me?
Yes.
Hear me? Oh,
Yes, we can.
the price is not showing on your own.
No,
Because
it's not
showing on
showing.
mine.
The price will always come down to, and price will always fall down to between the 20% or the 30% at 0.23 or the 0.382 or further to the 50%, 0.5 or 0.6. Price, if you need to draw your fib well, when you're drawing your fib, pay attention to, look, it's just very simple. If you want to know how to draw your fib very well, you need to go and learn market structure very, very well, so that you will always, have in mind possible, like the swing low, that the lowest point price got to, and then the swing high, the highest point price got to. So if you draw your fib well, you're able to locate your swing low to your swing high in terms of a bullish, an uptrend. Price will always fall between those values, 2.3, 0.2, 0.3, or 0.5 and 0.6. Price will always fall there. So retracement will always take place within those regions, those values. So the problem is you drawing your fib level very, very, very well. Please to emphasize the golden zone. The golden zone is the 60%, 0.68. You know, it is assumed it's a normal behavior in markets. Like, you know, see, when you're actually analyzing the chart, it just simply tells that a lot of traders, you know, are actually doing the same thing at that same point in time. It's just more like an activity, because every trader that comes on a chart, a good trader, a professional trader that comes on a chart, Daniel might be on a chart, okay, and I also on a chart. So Daniel is a good trader, I'm a good trader. It just simply tells that we know how this principle works. So we might be doing the same thing at that particular point in time, you know, coincidentally. So now it is assumed that that level, it's more like a psychological level. Like, it's every trader assumes that once, because it's actually a behavior that has been observed for a very long time. Okay, so anytime price comes to that region, okay, and then price reverse from there, it simply it just tells that and a major reversal is imminent. Price, of course, price would retrace to that level and then continue in its original direction, but it's, you know, it assumes that very soon, not too long, there's going to be a major reversal. So let's assume we were actually in a bullish trend, okay, and then price retraces back down, price pull back to that level, to that 0.6 level, and then price now started going back up. So just bear in mind that price will not go that far before a major reversal happens. Okay, so every trader always knows that. Okay, that's what it means, that golden level. Okay, one price is there and the price retraces. Of course, you might catch up with that trend bullish, but bear in mind that your take profit shouldn't be too far. Just look for the closest supply region, you understand? Or you might even, like Danny said, you might use that 0.23 level, you know, to mark your profit. Then observe, if price gets there and then maybe price move past, you can trade your profit, or you take 50% off your profit and then wait for, and then allow a price, the remaining 50%, you know, to do whatever it wants to do. But ensure that you have protected your trade. Of course, you have moved your stop loss to your entry, that you know the times is break even, or you have even traded your profit, your stop loss slightly above your entry, so that even if price comes back and stop you out, of course you come out in profit, you will not completely, you know, lose any money in the market. So that's what it means. When market trend is between 0.6, 0.618, you mean it is in an overbuy or oversold region. Let me tell you something. As a trader, I don't use indicators. Okay, I don't. If you really want to become a very good trader, you have to skip that indicator thing. I don't use indicator. No, see, everybody believes in what works for them. I'm not trying to dissuade you, or I'm not trying to discourage you. Okay, everybody use what works for them. For me, I purely believe in price actions. I allow price tells me what to do. Okay, so the oversold region or overbought region, I don't know how that principle applies to you, but one thing I'm going to say is, if you're using a Fibonacci tool, and as I'm explaining, that you should take note of those levels. 2.3, 0.2, 0.3 levels are an indication that price, you know, is actually very strong, depending on what market you're applying to. So in terms of crypto, you know how messy the crypto market is. And you know, the crypto market currently now is driven by fundamentals. So you need to be very careful. So you want to take as much as you can within a short period of time. Don't let it. So always bear in mind, currently now, if you want to apply Fibonacci and maybe price retraces to the 0.2 or 0.3 level, know that price will at least hit the 0. Price will at least almost gets to let's say the 100%. You know, just look for the closest supply, you know, and then take your profit. But principally, how Fibonacci works is, if price retraces to the 0.618 level, bear in mind that price, that guy will not go far. it is going to continue that trend, of course. You know, for every impulse movement of price, there's always a pullback. Okay, there's a pullback, and then price continues in a direction, you know, it was actually going. But use that same Fibonacci. If you don't know how to use the Fib trend, the Fib based extension, which is very simple, the Fib based extension will always tell you possible points price might likely get to. So you use the closest point on the Fib extension level to take a profit. Don't be greedy. Crypto market currently is very messy. So you might want to take few 20, 25%, 30%, and go on. And if you still want to remain in the market, trade your profit, protect your entry. Okay, so if anything happens eventually, maybe a news came out, and you know, like, then the news prompts the market to quickly reverse. You know, all those sharp and very steep drop. You get that kind of thing. The market doesn't, you know, just kick you out with loss. Okay, you should always learn how to protect your trade. Okay, so that's how it works. Fib 0.618 level is more like a psychological level. That's why we call it a golden zone. You know, every trader knows that when price is at that point in time, price goes back to its to the original destination, but it doesn't really go that far. Just look at when I used Bitcoin to demonstrate. When I did that replay, I used Bitcoin to demonstrate that you know, that effect. You saw what happened. You saw how Bitcoin went. I think Bitcoin got to that level, to that I think it got to that 100% level, and then retraces back. You know, then retraces back, and you see how far Bitcoin came down. So that just give you, see, using Fibonacci doesn't really give you a confirmed entry. You have to look for other confluences. Bear that in mind, though. Don't say you heard it from Newton that once price gets to 0.2, 0.3, then possible you rush and take your. No, you don't do that. Fibonacci just give you an idea of where price is likely to retrace to. Then look for other factors to confirm your trade before you take that trade. A good trader will always look for at least 3 confluences. You want to look at, okay, where price is retracing to, is it actually a major zone, support zone, if it's a bullish movement, or a bearish, if it's a bearish resistance where price is traced to. You want to look at other factors. You want to look at SMC concept like other blocks and other the rest of them. You understand? So you look for at least other factors to confirm that trade. But Fibonacci will always give you, you know, an idea of where price retraces. If you miss a trade and you want to enter that trade, of course, you always want to wait for pullback. So that pullback point is a role Fibonacci will play. Okay, it gives you an idea. So once price comes to that, you know, that zone, either the 0.2 level or 0.3 level, that's 30%, or the 50% level, and price then reverse, then you now use your candlestick patterns to confirm that, okay, maybe you're now spotting a chart pattern, maybe you're now seeing a double bottom, or you now see in that double bottom, you're now able to see, oh, there's a bullish engulfing candle forming at that point in time. So those are confirmations. You quickly enter your trades. At least from there, you know that once you've entered that trade, you know the next level price might likely get to because of the two available to you, the Fibonacci retracement tool and the Fib based extension tool. So this is how these two works. You understand? So this is how you can actually make use or take advantage of this. They are very good tools, very, very good tools. I know I'm trying to use terms. You use retracement. So you mean when it gets to that golden level, a pullback is certain. Yes, depending on what market you are applying the Fibonacci, you know, you see, in the crypto market, you need to be very careful. That is why I said when price pulls back to that golden zone, watch out for other factors. Now, look out for if the coin you are trading at that particular point in time does not have any fundamental news effect. Very important. So if there's no new effect, if it's just the normal price actions movement, fine. Of course, there's likely 70% that price would pull back. After when there's a pullback to that point, price will start to go back, not retracement. Yeah. See, listen. When price moves up, an uptrend, impulse movement, an uptrend, there is always a pullback, a retracement. The retracement is a pullback. Pullback, market structure. Market goes up and then pull back and then start to go back up. Okay, there's a lot to market structure. In that market goes up, pull back and then go back. A structure has been broken, another block has been formed. There's a lot to it, but just in the simplest form, market structure, market moves up, pull back and then continue. So anytime market moves up, there's always a pullback. That pullback is where you want to catch up with the market. So that is where you now look out for the retracement. Okay, when you draw your retracement, you're saying something?
No, go ahead. Sorry.
Okay, when you draw your retracement, for an uptrend, remember your swing low, your swing high, and then maybe market and retrace to, let's say, the 30% level. Oh, you know that the trend is strong. But for crypto, don't say because market retrace back to 30% level and you feel like the trend is strong. Then when you're now in good profit, you now leave the trade. Sorry, fundamental will just come. Something Bitcoin might just do is nonsense. And most of all these altcoins follow this guy. So a lot of fundamentals right now, fundamentals is actually affecting the market. So once you just protect your trade immediately, even if you don't want to leave the market, trail your profit. Okay, trail it, move your entry maybe to 50% of your trade, and then let the market, and then leave the rest to do whatever it wants to do. You understand? And you might just be in your favor. The market actually, respects that, strong momentum to the upside, and you see other a more good profit, and then you take your profit and you feel good for the day. But always watch out for protecting. Once market has actually moved a bit in your favor, go to a lower time frame, like 5 minutes. Go and mark, just mark somewhere slightly above your entry price and then put it in your stop loss. Okay. Then as price moves in your level. So that is it. So summarizing this whole thing, Fibonacci retracement and Fibonacci fee-based extension helps you to, possibly spot where price might likely retrace to. And when price starts moving your direction, it helps you determine where price might likely get to. That's just all. Thank you very much, everyone, for having me here tonight.
Thank you very, very much, Newton, for this wonderful emphasis once again. So, like we've always been taught, you do not rely on one indicator to make your analysis. So, Newton, you said you don't trade indicators. Some of these indicators are also price action. So they helps you to identify when market is ready to reverse. So just like you say, you don't know how to trade RSI, relative strength index. It might be something you might also look into, because these indicators are part of technical tools to use to analyze the market. For example, when those who trade only RSI, may not always be in the markets all the time, but they can never get it wrong, because RSI can never go above 100 level, 100 points. But for bullish market, it can never go. If you are trading in one day, it can't go above 100. So let's assuming that you meet a coin at 95 RSI at that overbought region. Certainly, that coin is going to do a pullback or retracement. So we don't rely, I keep telling people, we don't rely on one indicator to base our judgment, just like this fib that we've learned today. So fib, once you see that fib is confirming a reversal or a pullback, then you look at other indicators to know whether they are talking the same thing. Sometimes all these indicators are talking the same thing, just like this sushi Daniel was using to cite an example. If you look at 4 hours, sushi 4 hours, moving average convergence divergence is showing a bearish sign. So, but you are not also going to rely on that to base your judgment. So you combine one indicator with another. So all of these indicators and technicals, pattern, and market structures, price action, they are there to help us to know when to make a right decision in the market. So I want to appreciate our leaders for bringing out time to anchor this lecture. Alex AC, thank you very much for taking us from the beginning. The person that have question, this Zoom has taken longer than it should. I don't know. Mohammed, okay, the person brought that. So I want to appreciate our leaders once again. And this is a reoccurring Zoom. We have it every Sunday. So if there's any day we're not going to have the Zoom, we will let us know. So but as long as the Zoom is going to be reoccurring, we would promise to re-emphasize on this Fibonacci retracement and expansion again. Once again, I want to thank everyone who made our time to be part of this call this evening. I encourage you to try to identify yourself with any of our group, because you will learn a lot. Like our brother Daniel and many other people too who have broad knowledge in crypto, they've been supporting. We also get free signals sometimes, trade this, take profits. So these are ways we support our members. So you are also allowed to, just like we didn't even Newton didn't prepare to teach this evening. We just took him on our way. Perhaps if he knew he was going to anchor this evening call, he would have done better or more. He would have given us a lot of value this night. So we want to also appreciate him for this impromptu class that wasn't planned, and he did amazingly well. Thank you, Daniel, once again, and thank you everybody once again. So I would unmute us all at this moment to just say goodbye to everyone, Emmanuel. So
All
don't
right, Crypto Queen.
Goodbye. Thank you.
yes.
It's not like I don't know how to use RSIO. I know how to use RSIO. I know a lot of indicators. I can even suggest so many indicators, good ones, not common ones.